If you look at how much cash is available, Tavi Costa did an interview, probably been about a year ago, and he talked about this 5 trillion that's kind of sloshing around. If you take 1% of that, that's 50 billion. That's only 1%. 50 billion is 2 times the entire silver market. Silver market right now at $29 an ounce is a $29 billion market. At the time he wrote that article, it was about $25 the ounce. So $25 billion is the silver market for 1 year, all mining and recycling combined. 50 billion is 2 times that. So if you don't think that 1% of all this money would flee to a safe haven like silver, think again. So this is just 1%, but if we really get a scare, we might see something like 5%, 6%, 7% move into the metals. And if that were the case, you could probably put a paper price on it. And especially if it's in a panic mode like we saw, or I saw in the late 79, 1980 period. It didn't last very long, but you could feel the panic in the air if you were in the metals at the time. And even as a somewhat objective observer watching the financial channels at that time, which were few and far between, nothing like we have now, what you could hear the commentators being kind of perplexed and nervous at the same time. My gold keeps going up every day. Like, why is it? They didn't know, but they knew it was. And more, calls are coming in. What's happening to gold? What's happening to silver? Why silver's acting like this? And those kinds of questions. Well, it was because of fear of currency failure.
Right.
And the reason it didn't fail was several, really, but one of the main ones was Volcker was so powerful in his convictions that he came in and put interest rates well above the nominal rate to a true rate that was above the real inflation rate. And because of that, it basically killed the precious metals markets and put the dollar back on sound footing, more or less, and away we go again. So this time that can't be done. The bond vigilantes are starting to appear a little bit again. And on top of that, the bond traders might, make some juice when the interest rates are lowered. But I think it'll be too little too late. And I think gold has already sniffed this out. So when the interest rates start coming down, it's an obvious signal that the Federal Reserve, the banks globally are giving up. And they're saying, we're just going to print until you people are wise up to the fact that this stuff isn't worth what the paper is printed on. And the people that know that in advance will start pushing the price of gold and silver higher and higher. And then the public will catch on later in the game saying, why is gold and silver rising? That's because the currency is being destroyed for the last time. And am I, right or wrong on that statement? I'm correct longer term. Could it have a couple more iterations? Possibly. But everything I've studied has indicated this could be, I'd say would be, but could definitely be the last time, or very near the last time, where you can stimulate the economy by lowering interest rates. So you're stimulating the worthlessness of the dollar. And that's what's really going to take.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, U.S. Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video.
So in that sense then, do you believe in a sort of environment characterized by higher interest rates for longer? Like after there is a cut, do you think we'll return to higher interest rates for longer? Is that what you're saying, or am I misinterpreting?
No, I don't think you could get the higher interest rates for longer because the system would collapse. you wouldn't be able to do the debt service on the national debt. I mean, right now it's about 75% of all tax receipts. So if you put the interest rate up to say 10%, mathematically, you couldn't, you wouldn't even be paying the interest on the debt with all the tax receipts. So we're in a position where all fiat gets, mathematically, it's impossible to pay off this debt. You can't grow your way out of it. We have limitations on how much energy we can, make and what the costs are. So there's a point of no return. We crossed that some time ago. It's just the markets haven't realized it yet. So they have not manifested in a reality check where some of these high-tech companies that haven't made a profit in a decade continue to, fly to the moon because they're a popular stock with a huge backing and a great story. But the reality is they really don't provide, they're mispriced. The valuation is not accurate. It's not commensurate with what's actually provided to the physical economy. So we're going to get to a point where we're going to see a correction, I think, that's above and beyond what most people expect, because reality does set in at some point. And the real worth of some of these corporations are not what's being displayed on their stock screen at the current time.